Hi, hello everyone, and welcome to another edition of BullionStar Perspectives. My name is Ronan, and today we're delighted to have on the show John Adams of Australia. John is a professional economist. He's a well-known commentator on TV and in print media in Australia. He's an economic analyst, and he has an avid interest in gold and silver. Also, he is the chief economist for As Good as Gold Australia, which is South Australia's largest bullion dealership. Hello, John. Welcome to BullionStar Perspectives.
Thank you for having me.
And so we're very excited to have you on the show. And I hear that you're like one of the people in Australia that when there are investigations about gold, you and the Reserve Bank of Australia, you actually have an advantage over everybody else because you know some of those central bankers and you know the parliamentarians since you have a background in the Australian Parliament. Is that right?
Yeah. So back in 2012-13, I had the opportunity to work for a senator in terms of being their economic advisor. So I know quite a few people in Parliament. Part of my background, I've been a public servant as well in terms of the federal government as well. So I've got a very good background as to how the bureaucracy works. So particularly when I've looked into some of these gold issues, I've been able to have conversations with people in Parliament, people in the mainstream media as well. We have a new senator who I think I'll go meet for the first time face to face in a few weeks, who's very interested in this gold question. Whether it's about Australia's gold being in London, there's a number of Australians who want the gold back. He's also interested in the issue of the gold audits, the gold leasing. So there's been me and a couple of other guys who have been at the forefront of trying to ask the Reserve Bank a series of questions on gold. And we've found some disturbing things, I would say. The mainstream media really hasn't sort of delved into these issues, but hopefully with a couple of allies in Parliament, we can start to bring more attention to what's really going on.
Wow, that's all very intriguing. And when I was researching about the Reserve Bank of Australia gold, I came across the probably most interesting fact from my point of view was that although currently the RBA has 80 tons of gold, mostly, nearly all of which is in London, at one stage back in 1997, it had 247 tons of gold?
Correct, 247 tons.
And it sold 167 of those tons. Do you know why they would have done that? Why did they sell like literally 70, 80% of their gold at the same time?
Sure. So probably what I will do is talk about two reasons. One is I think there is an unofficial reason because it wasn't just Australia who sold gold during that time. I mean, the Bank of England, Gordon Brown also sold a lot of gold. Canada sold a lot of gold. A whole bunch of other central banks. So there was a definite theme going around central banks and governments around selling gold. Now. I would say that was part of trying to put a cap on the gold price by trying to flood the market with additional amounts of gold. But so that's what I think the unofficial reason is. But the official reason was basically, so I was just looking this up before our interview this morning. There is a press release by the RBA from 1997. And they basically said that at that point, 20% of the international reserves was gold. The gold that they held was basically, so the 267 tons, that position was established in the late 1970s when we had stagflation. And basically by 1997, they said, well, stagflation is no longer around. Those sort of risks are not necessarily, the RBA is not exposed to. Therefore, there's no real economic justification to hold that level of gold in terms of the international reserves, because obviously gold doesn't actually produce any yields. So they basically said that given that we have no risk around stagflation anymore, and systemic risk around the international financial system no longer sort of exists as well, what we can do is sell a big portion of our holdings, which is the 167, which they sold in 1997. And we can reinvest that in foreign government bonds, and we're able to draw a yield on that, and then draw an income source. And only in the last couple of months the RBA was asked in federal parliament about this decision looking back more than 20 years. Was it the right decision? And the RBA official says that, even though the gold price has gone up quite a bit. So I've got the numbers here. So we sold the 167 tons, we sold at $2.4 billion. And had they held that, that $2.4 billion worth of gold would be worth more than in excess of 14 billion. But the RBA was arguing to Parliament only a couple of months ago that they were able to reinvest that into bonds. They've been able to generate, a greater return. They've been able to generate an income source from that, and they think that that decision was justified. So idea would say that if they, put column to column, how much money did you make? In terms of how much money would you have made in terms of had you held the gold versus had you done what you actually did in terms of buying these bonds. I think the final analysis would show that they would have been smarter to hold on to the gold. But that's the official reason. No risk of stagflation in 1997. No systemic risk in the financial system. Australia has plenty of gold in the ground. We have a lot of annual gold production. So if we need more gold, we have an easy ability to access it. And we're going to diversify our foreign reserves by investing in foreign bonds.
Yeah, I saw that debate in an article coverage by Bloomberg. I think it was someone called Dr. Andrew Lay, who is on the Standing Committee for Economics in the House of Representatives. And this year there was a to and fro conversation between some of the members of that committee and the Deputy Governor and the Governor. Was it Guy Dubell and Philip Lowe? That reminds me of last year when they brought these guys in and grilled them. They didn't actually grill them. They were talking about the audits of the gold at the Bank of England. But I think personally they gave them a very easy time. So what's your view on the fact that, the background about the audits of the Reserve Bank of Australia gold at the Bank of England, and the fact that the audits didn't seem to be full audits at all. They were just partial audits, which wouldn't really satisfy any international standard definition of a physical audit.
Oh, yes. So in terms of the gold and the audit, so a few points. So the best that we can tell, so Australia has 80 tons of gold. From about the late 1990s, that gold was transferred from Australia to the Bank of England, and it is technically sitting there. That is what we are led to believe. Now, the first ever audit of the gold was actually in 2013, and then we had a subsequent audit in 2019. So the RBA refuses to reveal the audit reports. They've said to Parliament everything's in order, but we're not allowed to see the reports. Now, what came out several years ago through a Freedom of Information request was the Bank of England was extremely controlling of the process. The audit methodology was completely flawed. So basically, we had to give the Bank of England advance notice. We had to tell them when we're walking in, what time. They basically said, well, because we have limited staff, you can't just spend a lot of time here. We'll give you like 1 or 2 days access. And then initially they said, tell us which bars you want to look at, and we'll produce those bars in terms of the serial numbers. So, and they initially resisted when the RBA pushed for a random sample. They initially resisted even that suggestion in terms of random sample. They wanted this to be completely contrived. So when they did relent on the random sample component of the audit, they basically said, well, you can't just walk in and pick any bar from the 80 tons. You must, we're going to give you a selection of the 80 tons in terms of particular bars, and you can pick a random sample out of that. And that to me, smells extremely fishy. Having worked for one of the big 4 accounting firms in Australia, when you do an audit, I mean, the auditor basically has to have all the power. They have to be able to walk in, look at whatever they want to look at. They cannot be dictated by the auditee about what you can look at, how can you look at it. And there's obviously a whole host of documented issues about the Bank of England in terms of, particularly around there's no public bar list. So the RBA walks in there, they get shown a number of bars. Well, how do we know they're our bars versus those bars have been shown to another country? So,
Sure.
so you have issues around that. But then when you say, well, you can only, you have to tell us when you're walking in. You have to tell us. So for the non-random sample component, you have to tell us weeks in advance which bars you want to look at, and then on the random sample, we're going to control that. I mean that's a completely flawed audit. And again, there have been rumors, and GATA has been sort of leading this with Frank Veneroso about whether the gold is really sitting in the Bank of England. Has it been leased to the bullion banks? Has it been sent to Switzerland? Has it been recasted? Has it been sold to the Russians, the Indians, and the Chinese, and a whole bunch of other countries? Who really knows? But one of the big frustrations I have is, you do these sort of write these articles, you do these videos on YouTube, you get some people interested in these topics, but then when you go have conversations in federal parliament and they actually sit down in a public setting, now who knows what they say in private, but in a public setting, when there's the opportunity to ask the RBA some really pointed questions about this audit process, those questions are not being asked. And that says to me that there is either some sort of inside deal, inside conversation between the politicians and the central bank about this subject is not to be touched in any serious way.
Yeah, I would totally agree, because I know that last year you were covering that issue that when the deputy head and the head of the central bank went in front of the Standing Committee in Economics, and I wrote an article about that as well. So if the members of that committee bothered to read the article or talk to you, they would know that this year they could ask those more tougher questions, the questions they didn't ask last time. So the whole lack of proper audit raises red flags at the Bank of England. And it's not just for the RBA, it's for all of the central banks who are cajoled or pulled into, whose parliaments make them do physical audits of some form or other at the Bank of England. I think the biggest problem is that there are no public bar lists, as you say, so there's no way of knowing if that same bar that they show the auditors from the Australian Central Bank is actually sitting in a bullion bank account or is actually sitting in the GLD account. And the fact that they redact all of that information when they do provide those very small freedom of information documents, you can see where they've redacted all the information about the bars. So that's another red flag that the parliamentarians should really be scrutinizing the central bank heads when they talk to them. And this brings me on to a very intriguing discovery you made about some of the gold at the Bank of England last year. Just to fill in the viewers, the RBA sometimes lends gold from that 80 tons that it supposedly has at the Bank of England. Back in the 2010-11, it was lending nearly all of that. But then over the last few years, it's only been lending around 11 tons, 11.1 tons. But you've discovered, John, something very intriguing about who the counterparty of that gold lending deal that the RBA made at the Bank of England.
Mm-hmm.
Would you be able to fill us in a bit on that?
Sure, yes. So in terms of this gold leasing issue, so you're right. So we lease, well, the RBA since about 2016 leases about 11.1 tons of its gold. And that when I started doing some videos 2 years ago about gold and the Reserve Bank, I mean, that's sort of where we first started, because I read it in the annual report and they said that we lease gold. So, well, who do you lease it to? And so obviously there were rumors by, like I said before, GATA and Frank Veneroso around leasing leading to gold being melted down, etc. So we basically started to ask some questions around, well, has Australia's gold been leased to the bullion banks? Has it been melted down? Is the gold still sitting in the Bank of England, etc.? So that's where we first started. And one of the actually really interesting things that was an experience for me back in 2018 was when my partner Martin North and I started to do some of these videos, it got a lot of people emailing the Reserve Bank and they felt pressure. So they actually, because before 2018, there was no public information other than the annual report about the RBA and in terms of its gold holdings. So they actually created a web page where they provided some more detail about their holdings, where the gold is, gold leasing, the interest rate that they charge on the leasing arrangement, and a few things like that. So our YouTube videos did actually lead to some additional transparency, which was a good thing. But one of the glaring points that they made was, well, the counterparty is confidential. So we can't tell you who we released it to. But basically, what they did say was that they had the collateral to back up the lease arrangement, or they had an implicit guarantee from a sovereign government. So that's all we knew. Now, in relation to the 2019 audit, there was some documents that was released by the Reserve Bank in September last year. And in those documents, there was an email between two officials where some discussion about the gold leasing arrangement had been discussed. And in that email, it was revealed that the counterparty to the leasing agreement was the Perth Mint. So, and their formal corporate name is Gold Corporation. So the intriguing aspect of this is that in February of 2019, the Deputy Governor Guy Debelle testified to Parliament. So when questions were asked about gold leasing, the official testimony to Parliament was that when the RBA leases the gold physically does not move. That's what they told Parliament. Now, at the time, I thought that was a ridiculous answer because so at that time there had only been one audit, and that was in 2013. And if you've only walked into a vault once in 20 years, how would you know whether the gold moves or not? So that was one of the glaring omissions that Parliament never actually followed up with the RBA to say, well, how do you know that the gold doesn't move? On what factual basis can you say that? But assuming what the RBA told Parliament was true, the question then becomes why would Perth Mint, who is a Western Australian refiner and basically wholesale/retail seller of gold and silver, why would they borrow gold in a foreign vault that physically does not move? And we did a recent show on YouTube where we go through this question. And to my mind, what they're involved in is they're trying to artificially boost their balance sheet. So the Perth Mint is the largest seller of what I call synthetic gold products, gold and silver products in the Australian market. And what I mean by synthetic, I'm talking about products that make you believe you own gold, but technically you have no legal title. So we're talking about unallocated, pool allocated, ETFs, etc. So all of these sort of products that people want exposure to the gold price, but they physically, they physically and technically don't own any gold. And so in a number of these products, the Perth Mint says on their website, well, our products are 100% backed by gold. And so I think what the Perth Mint is involved in is when the auditors walk in and say, well, you've made a commitment to the market that these products are backed by gold, well, show us the gold. And so they've got a number of accounting entries where they can say, well, we own gold in various locations, but we've also borrowed gold, and that gold is under our technical ownership, even though we technically don't own it, we've borrowed it, but for accounting purposes, it is an asset on our balance sheet, and that is what we're using to basically compensate in terms of the requisite amount of gold that we have to have. So there are a lot of, what I've noticed is the level of sophistication in the retail market in Australia is very low. In terms of gold and silver, about the price structure. And I know you've written a lot about gold and silver price manipulation. Some people in Australia are very well aware in terms of retail investors. So there's a number of prominent articles and YouTube channels who are talking about this, and obviously GATA as well. So there are some people involved, some people watching this stuff who are learning and who are very attuned to what's going on. A lot of people are very clueless, but when it comes to synthetic gold and silver products and the risks around synthetic and what is their purpose, I've noticed that there has been there clearly is a misperception in the market. So that's why work for As Good as Gold Australia, we're an old-fashioned bullion dealership in the sense that we don't offer any synthetic products whatsoever. We just deal in physical gold, silver, platinum. And basically, if you want to have legal title, that's exactly what we provide. And so we've been trying to educate the market to say that, if you want synthetic, go ahead and buy it. But you just need to understand that there's additional level of risks involved in these products. And obviously, if you're buying it on the premise that Perthman says that they have the gold and silver, well, part of the portfolio that they're relying on to make that claim is gold that has been borrowed and it's not physically in their possession.
And that brings me to a point I was curious about. Australia is the second biggest gold producer in the world. I think last year it produced 380 or 328 tons of gold, just second to China. And culturally and historically, gold is very embodied into the history and the culture of Australia, with the gold rushes in Victoria and New South Wales in the 1850s, and then later on in the 1890s in Western Australia. And then subsequently, a lot of the refineries, the Perth Mint is historically connected to the Royal Mint's refinery, which was created in Perth to refine the gold from the Western Australian gold mines. So do you think that Australian people have more of an affinity with physical gold because of the historical connections? Or at this stage, is it so long ago that they're literally the same as other Westerners who don't really have an intrinsic grasp of the importance of physical gold?
Yeah. So what I would say is that I would agree with the latter proposition that you put forward. I mean, so in the last couple of years, we've seen an uptick of a lot of new Australians wanting to buy gold and silver, but historically, in terms of ownership, in terms of now you may have some institutions wanting to hold gold in Australia, but at the retail level, it's been a very, very small fraction. Our university sector is full of Keynesians, and obviously people who follow the Keynesian School of Economics don't have any understanding of what gold represents, why gold is important. So gold is not really talked about in the mainstream media. It's not promoted by financial advisors. And one of the things I've noticed in the last couple of years as I've been in the industry is we've had a whole host of clients who have come to us and said that they want exposure to gold and silver, whether it's part of their superannuation system or account, or whether it's part of their just private holdings. And a number of financial advisors try to talk clients out of holding gold and silver. So part of it is I think the advisors have no idea what they're talking about. But the other part of it is that gold and silver in terms of physical, it doesn't generate any commissions for financial advisors. And so, all of these people are trying to push their clients into products where they can get some sort of commission or some sort of income trail. And gold and silver, maybe you can earn, if you push your client into gold, maybe you can get a clip, when they buy it. But then if the gold's just sitting there on the client's balance sheet, there is no recurring income. So there are some big issues with conflicts of interest among financial advisors, etc. So, but I have to say that as the gold price has been rising, I mean, I think in March of this year hit an all-time high the gold price in terms of Australian dollars. So there is now more of an awakening around gold and silver. More Australians are looking to get exposure. The whole message of we have a global debt bubble, we have too much debt, the central banks are printing like crazy, that is now penetrating more Australians. I would dare say that it's still a large swath of Australians have no exposure to gold and silver. They don't really understand this stuff. They're still sticking to their typical assets of real estate, shares and bonds, but also in terms of cash. But I think that as we go forward, I mean, my view is that we are seeing stagflation in Australia already. I think this process is going to intensify, and as the gold price continues to go up because of the actions of the central banks around the world, more Australians will wake up to what's really going on, and there'll be greater demand for gold at the retail level.
I know that the show, I think it's called Aussie Gold Diggers, is very popular in Australia and across the world. I would have thought that maybe that was an inkling that people are more interested now than before in physical gold, but maybe that's just for entertainment purposes. But has, from a RBA perspective, with Australia being the second largest gold producer in the world, it seems to me a little bit illogical that the RBA itself doesn't buy some of the annual gold output from the Australian mines. Even if it bought 10% a year, that's 30 tons. Do you think that that is, again, because of the fact that the RBA is a central bank who, like Western central banks, has to downplay gold, and it's from the Keynesian school as well, which doesn't want to create a momentum amongst other Australian investors. If Australians saw the RBA buying gold, that would probably boost the demand from the retail level.
Sure. So a couple of points there. Absolutely, the leadership of the RBA are 100% Keynesian clones. They don't understand gold. They don't understand what they're doing. Only yesterday, the Deputy Governor, Guy Debelle, gave a presentation where he talked about monetary policy and options going forward. He's talking about the Phillips curve. He's talking about all sorts of concepts which were basically, they were proven to be wrong during the 1970s, and they're still holding on to these old theories. That is definitely part of it. In terms of, obviously, when you see which central banks around the world, I think it was 2018, 2019, the World Gold Council said that it was the largest amount of gold buying by central banks since 1967. Well, who are those banks that are buying? Obviously China, Russia, India,
Kazakhstan.
So you're seeing a whole bunch of non-Western countries, and whether there's some sort of implicit agreement by non-Western countries not to buy gold, I don't know, but it definitely would make sense for the RBA to buy gold and to increase its holdings. It definitely would make sense for the RBA to call up the Bank of England and says, okay, we want the 80 tons back in Australia. But that's definitely not going to happen under this current leadership. And one of the messages I'll be taking to Parliament next month is that if you're serious about boosting the gold reserves of the government, if you're serious about getting Australia's 80 tons back, you've got to change the leadership of the RBA, because these guys are clueless.
Yeah, I was going to ask you about, was there any type of ground level organization to bring back our gold? Various countries like Germany, even in the Netherlands, I think they had campaigns to bring back gold, and Switzerland. Has there ever been anything like that in Australia to bring back gold to the RBA headquarters in Sydney?
No. The thing is that, so prior to 2018, hardly anyone hardly anyone knew that the gold was actually not in Australia. And then in November of 2018, in a public forum, the RBA governor was at a function, and he was asked by one of my audience members about gold and about bringing it back, and the whole premise. And here's the peculiar point, Ronan, is the whole premise of gold being in London is that London is the largest gold market in the world. If the RBA ever wanted to buy or sell gold, having the gold there, it would make it easier because of gold transactions. Now, the peculiar explanation around this is that since 1997, we have neither bought nor sold any gold. So we've held the 80 tons since 1997 for more than 20 years. And if we and the only thing we do is lease. And the RBA testifies when we lease, the gold doesn't move. So why can't we lease while the gold's in Australia, particularly because it's a Perth Mint? So and again, here's where Parliament is completely failing. It makes no logical sense. If we're not buying, if we're not selling, if when we lease the gold physically doesn't have to move, why does it have to be in London? So, these are all legitimate questions. And again, the mainstream media, but also the Parliament won't ask questions. And the funny thing is that I've got some former parliamentarians who I have regular conversations with, and they asked me, in terms of a general proposition, why is it that the Australian mainstream press, they don't ask any tough questions of the RBA? We're all scratching heads, and I've had a few conversations with some journalists and saying, why don't you actually apply some pressure on the RBA officials? Because if I was a member of Parliament, you give me an hour and I'd be able to rip these guys to shred, not only in gold but on monetary policy, on Australia's debt bubble, on a whole host of factors where they have basically mismanaged the economy. But they don't get any scrutiny. And some journalists will say, well, we do ask tough questions. Look, that I think is completely bogus. But no, there's no campaign, and there's no pressure to actually there's no pressure on by the Parliament or the press to actually bring more of these sort of issues to light.
Yeah, I've had the same experiences in different countries well, dealing with journalists from different countries, I could name various incidents, episodes where I, in minute detail, explained to Bloomberg, Reuters, Wall Street Journal, FT about various parts of the gold market in London and various things that they should follow up on to do with gold lending, to do with the fact that gold maybe not isn't where the banks claim it is. And then when they produce their articles, they just completely avoid all of that. I don't know whether it's the journalists or the editors or the editorial policy, or there is just, they know that if they do that, they'll get into trouble with the regulators for asking tough questions. It's bizarre sometimes, but there seems to be a pattern to it.
Yeah, well, yes. I mean, all I can say is there seems to be some sort of, whether it's an implicit agreement or some unwritten rule that there are certain subjects not to be touched in the West in particular. And so I have seen it. Now, having said that, I mean, one of the things I will say is that the majority of journalists in Australia, and I can't speak for some of the publications you talk about, but the majority of people in Australia, in terms of the press, have no idea about what's really going on in terms of gold, the gold market, leasing, the audits, in terms of price manipulation. So the level of education understanding is extraordinarily low. But there are a couple of smart cookies in Australia, but those cookies, for whatever reason, refuse to actually do their job.
I see you mentioned manipulation. You have a pretty holistic, big picture view of what manipulation might involve in the precious metals markets, which would extend to the whole system, really. Is that your view, that it's such an ingrained part of the system that it involves huge amounts of participants?
Yeah. So a couple of points. The first thing is that we're starting to see a growing network of voices in the alternative media who openly talk about in terms of gold and silver being the prices being suppressed. I know that you recently spoke at the Silver Fest with Chris Marcus from Arcadia Economics. I've spoken with Chris on the phone a few times. I've got his book. I've listened to a number of the interviews that he has done. In terms of some of the leading experts. The interview he did with Bart Shilton. Bart Shilton is basically saying we had the evidence of JP Morgan, but political pressure prevented us in terms of going forward. And I think it's only in the last week, a trader from JP Morgan, a trader from Deutsche Bank, correct me if I'm wrong, basically admitted that he was doing spoofing and he was being taught by his managers in the bank about how to do it.
Yeah, there's a court case going on in Chicago right now. The Department of Justice has prosecuted 2 traders from Deutsche, but a third one, who was their junior, has gone state's witness, so to speak, and is saying that this is what happened, that his bosses, the 2 other guys, taught him how to spoof, and every day we're training him how to do this. So that's part of the evidence in the court case.
Yes. So when you look at so for me, it's easier to make this case in silver compared to gold. But when you look at, for example, if you compare where we were in, say, the 1979, 1980 versus now, look at the growth of the money supply, look at where the price is. So I read an article at the beginning of this year, and I said, well, the money supply in 40 years has gone up in Australia by 2,600%, and yet the price is 42% below the 1980 high. That makes no sense in terms of any form of economic theory that you want to justify. And I remember listening to an interview by Ted Butler, and Ted basically said that he was seeing this strange phenomena back in the 1980s. Someone, when he was working in, I think, Wall Street, someone asked him, why is it that the money supply is going up and yet the price of silver is still going down? And he started to wrap his head around that sort of economic dilemma, and he realized that there's corruption. So it's easy to clearly see that there is corruption. And now with these lawsuits, now with obviously Bart Shilton's public interview with Chris Marcus, we're starting to see that it's no longer a conspiracy theory, it's actually a conspiracy fact. And the question then becomes is, well, who's really involved? So my view is that it's not just the bullion banks. There are central banks. There are, I think one of the things I picked up from some of your articles is there are some mainstream media organizations involved by pushing false stories and propaganda in order to, in order to divert the public's attention away from where the real story is. But also, when you see organizations who are supplying the COMEX, and in a Perth Minute was a classic case. So back in April, they're telling Australian retailers and the bullion retailers, we can't provide you product. You've got to wait 8 to 12 weeks to get our product. And yet Bloomberg is writing articles saying that they're shipping, or they're flying tons of gold from Perth to New York to support the COMEX. Well, by refiners supplying the COMEX, they're actually facilitating the suppression of the price. So the question is, well, why would refiners do that? Because particularly some of these refiners that are owned by sovereign governments like the Perth Mint, if they refuse to supply the COMEX and the COMEX breaks and the price goes high because of a short squeeze, well, countries like Australia will make more money from gold. And so when you start to look at who's really involved in the LBMA and in the COMEX, and what are these different parts of the puzzle? What are they doing, and are they working in concert to actually keep this price suppressed? And so to me, I mean, I'm a chess player. I've been playing chess since I'm 10 years old. I'm 39 now. My brain is trained to look at patterns, and so I can see a clear pattern of, it's not just the banks, it's the whole supply chain which is actually participating to actually keep these prices under control.
Yeah, I'd agree. I think the supply chain is definitely participating. Some maybe without knowing it, some definitely as part of explicitly knowing that the whole system is suppressing the price. For example, the gold miners, they know that they're financed by the banks. Some of the big refiners are definitely involved. They're on the board. Some of the heads of the big refiners are on the board of the LBMA, so they couldn't not know what gets discussed at those meetings. I know we've only got a little bit of time left, but I was intrigued to know your views on something that is affecting everyone at the moment around the globe, and that is all of the restrictions, lockdowns, and various restrictions on liberty that are caused by this COVID pandemic, and how that relates to economic freedom and liberty. Do you think that we're at this crux where things are getting so out of hand that we have to really think about the future of humanity as regards economic liberty and economic freedom? And does gold play a role in that?
Sure. Well, yes. So a couple of points. So it was clear to me. So when the COVID started to come out in sort of January, February, early March, I mean, I was sort of quite silent because I just wanted to see where this was going. And by mid-March, because I wrote an essay, a 6,000-word essay for my website in early April, and I concluded the essay in March. By mid-March, it was obvious to me that the risk of COVID-19 was nowhere near what we were being told. So Imperial College from London was saying that if left unmitigated, 40 million Australians, 40 million people worldwide would die. In Australia, the government was being told that 150,000 Australians would die if we didn't do anything about it. And I've never been against not doing anything, but to me, what we have seen is the COVID-19 is, because when you look at the amount of asymptomatic cases, so it's anywhere between 50 to 70%. So a lot more people have COVID-19 relative to the official case count, which obviously means that it's less lethal. And then obviously once you start to look at in terms of the number of deaths, we know that the number of deaths, I mean, certain people being heavily impacted, people who have comorbidities, people who are old. I mean, Neil Ferguson in the House of Commons was asked at a select committee, without COVID-19, how many of these old people would have died anyway? He said potentially up to 2/3. So yes, is COVID-19 killing some people? Yes, but nowhere near to the extent that we're being led to believe. And the response by governments, particularly in the West, particularly in Australia, particularly in the case of Victoria, which is the most totalitarian regime perhaps in the Western world, we have completely lost our minds in terms of, we have abandoned what in terms of Western civilization, Western principles, in terms of, there's a crackdown around freedom of speech, freedom of assembly, the ability to protest, the ability to, and again, different countries have different regimes, but in terms of Australia, we don't have any weapons, so we can't fight back against in terms of the police force. So, and we've seen violence by the police because of people who post on Facebook or who want to oppose these measures, or people who just want to be free. And we have completely sort of lost our minds. And one of the most so there are a lot of Australians now waking up to this totalitarian regime, and it's not just about economic freedom; it is also about political freedom as well. But yet there is. In the latest polling, now some people think the polling is fake, but only yesterday, the Victorian Premier has like 62% support. So he still has majority support, and that's a question of, well, it seems to me that if the polling is accurate, too many people still buy into the fear of COVID-19. And a lot of people, what I noticed in Australia is when I wrote my essay, people started to read, because I had like 60 footnotes. So I basically did use a range of official sources to figure out, well, how lethal is this virus. A lot of people just rely on official on the mainstream media.
So, but I hope that people will start looking at alternative sources and not the mainstream media, because the mainstream media seems to be literally playing the role of cheerleader, and it's quite worrying. But I think that people who hold physical gold are a slightly different bunch, and they realize that the reason they hold physical gold is for times of calamity also, and that it might come in handy, especially in the future. So John, thanks very much for joining us. It was really a pleasure to talk to you, and it was very intriguing and interesting, everything that we've talked about, and I'm sure it will be, our viewers will get a lot out of it. So thanks again.
Thank you very much.